you need to see the technicals that we have up, and I want to give some context with the market. So we're going to talk about what we saw yesterday with the economic reports and what is taking place tomorrow, 10 a.m. Market on your calendars. So let me put this up here for you, trading economics, then we'll get right into the charts. So yesterday on Wednesday, I said it on Tuesday. We want to watch out for that 10 a.m. hour. I think it was Tuesday. If it wasn't, it was Wednesday morning. Non-farm payroll annual revision. I said if that was revised down, it can be downward pressure for us. So what else do we have? FOMC minutes on that day, and then we move forward to tomorrow. Jerome Powell speaking at 10 a.m. And I guarantee you that the market is worried about what he's going to say at the Jackson Hole Symposium. This time, it's not about being super hawk for trying to combat inflation. I think it's now, especially with that revision to the non-farm payrolls, people instead, I think the market is actually worried that he's going to tell us that things are much worse than they thought and that they were on their heels. I think that there's some trust that the Fed wants, and I don't know that they're going to get that if they come out and say those things directly. But any words that they give that they need to cut a little bit more aggressively, they're going to change what we see projected for the CME Fed Watch tool, by the way, which actually, let's go to September, and we'll talk from there just about the most recent changes that we've got. Let me put this up here. So about a week ago, let me see. As a matter of fact, let's go back a month. We actually had an 88% chance a month ago of just a 25 basis point hike, 3.7% of being 25 basis point hikes, and a 7.7% chance that we stay right where we're at. So a week and a day ago. So 1 week ago, 1 day ago, either way, no chance that we stay where we're at. According to what we have on the CME Fed Watch tool, we went from 75% down to 62, back up to 75 currently for just a 25 basis point cut. So we're keep on teetering back and forth of like, how much weakness are we expecting here? What exactly can we expect at the September meeting, which is on September the 18th? What is going to be that decision? Well, I think the market's a bit worried on what Jerome Powell could say. If you can go ahead and Google Jackson Hole Symposium 2022, and you can see the stock market impact for what happened that day. It was not a pretty day. The Fed is like, inflation's a serious problem. We need to do everything that we can. We're going to be aggressive in battling this. And the market was just awful all the way up until we got to October of 2022 when things actually started to turn around. So this could be that time that we see maybe something a little bit similar, not necessarily the same messaging from Jerome Powell, but maybe this time it's more of a signaling of worry about possible economic weakness. Maybe that jobs is that first thing that goes. And you can look up the recession cycle for what exactly happens with that. And the layoffs are one of the things that can happen that can push up that unemployment rate. And I'll tell you what, we're not too far away from September the 1st. If you don't think the pressure is on the unemployment rate coming up for September, for August numbers, I think that you're sorely mistaken. So we absolutely want to be on the lookout for that. So let me bring up the calendar. Let's see if we can pull that up quickly. So let's go with next month. There we go. And it's usually on a Friday when we get those unemployment numbers. Thursday, Friday. There we go. On Friday, September the 6th, unemployment rate previously at 4.3%. Forecast staying at 4.3%. If that thing ticks up at all for us, here it is. I have this up here on the screen for you, Friday, September the 6th. If we move up beyond 4.3, the market is not going to like it. 4.3, market, actually, I think that they're hopeful that it's wrong and it's going to pull back down. I just don't know that I see that happening. So it's something that we want to be aware of, something that we want to be watchful for. And when Jerome Powell speaks, we want to listen for what it is that he's saying. What is he signaling to us about the economy? That's going to be huge for us, especially where jobs are concerned. Anything jobs numbers between now and then is different than what we expect. It's going to be a catalyst for market movement. If it's better than what we expect, that can be upward pressure for the markets. If it's worse than what we expect, that can be downward pressure, which that leads me to the markets themselves. Let me pull up the charts. We'll talk technical analysis here. So first, we're going to look at SPY. This line up here, in my previous videos, I said we're going to find heavy resistance there, and boy, do we ever. Look at that pepper coming down the chart, that red candle that we get after that rejection, coming back and retesting the previous price target of 556. So we didn't make it up to price target 2. Man, oh man, we got close to it. I said in the previous one, I probably should have made it the 563, but I was going to stick to my guns for that. Now, mind you, this is not canceled. I said this could be days, it could be weeks. I think that we are going to have that strength return. And if we see that strength come back to us before year's end, I think not only do we have price target 2, but then we have price target 3 to look up to. In the meantime, we have put in a little bit of a peak. It could be that we're going to really start looking for a serious floor here 550 to 551, we should absolutely be watching for that. Not only is it a Fibonacci retracement level and there's previous support there, but we also have the 13-period EMA coming in as well. Down below that at the 50-period EMA is about 543 for further support. And then down below that at the 50% Fibonacci retracement level is 536.43. So again, historic support in there as well. There's just tons of support all through here, taking us all the way down to the 618 at this last bottom support that we have, which is price target 2 to the downside, by the way. Price target 1 is off screen. There it is. 538, you'll see, and that's very much near where we had that 50% Fibonacci retracement level. So if we do pull back from this and we bounce off of one of the higher ones, well, that's actually showing us that the floor is considerably high, and then we start to retrace back up from there, and then we can start looking at retaking price target 1 and then really shooting off for price target 2. That's what to look for SPY. The technicals, I put these up. Now they're getting close to 2 weeks old, and they just keep on printing. They just keep on showing up for us. By the way, if you guys want to see my buys and sells, you want to be part of my community, see my technicals before they hit YouTube, they're available at the Patreon. In the Discord that you can access through the Patreon. That link is down in the description. And you can learn this technical analysis yourself. You can do so by using that link down in the description. For the technical analysis trading course, use the code word DOCTOR, DOCTOR, for massive savings. Let's get into the cues. This one, check out where we hit our heads. At price target 2, came up, nailed it today. So we got price target 1, waited a few days, got price target 2, sold back down to about where price target 1 is again. So that's the whole floor becomes the ceiling, ceiling becomes the floor. So your whole support and resistance switch depending on where that price action happens to be. So when we're down below it, 474 was a ceiling for us. Now that we're up above it, turns into a floor for us. Worked out beautifully. Let's get into IWM. For this one, we hit price target 1 a while ago. I think it was last Thursday. Today we hit price target 2. Boom. So as a matter of fact, we got 216.37. We missed it by about 63 cents. I'm taking the win anyway. You guys can consider it whatever you want it to be. I thought that was pretty solid for those technicals to call it that far out there, to say 217. We're going to get there. We got there. But as soon as we did get there, we got that rejection. We fell back down through this pretty solid support, which actually should be green, not red. So I'll change that up for you right now in front of your eyes. Get that updated technical in there. Boom, there we go. Showing it as a support area, not a resistance area. Up here, you'll notice still red. We didn't quite get up there yet. This 220, I said that we could see this most likely still in sometime in 2024. We'll have to see what the market brings for us. We'll have to see what Jerome Powell brings for us, what the economic reports bring for us, what the election brings for us. There are so many catalysts out there. I think it's really hard to put in all-time highs under these conditions. And that's why in my last video, I said for SPY and QQQ, I said, we're getting in shaky ground here. The Jenga Tower is getting pretty darn tall, and I just don't know that we have the environment for all-time highs. Bullishness, yes. Cautiously so. Volatility, absolutely. But as far as certain enough that we can really keep the punch going at the party to put in new all-time highs, I just remain skeptical at this point in time. Let's check out Bitcoin's price action. For Bitcoin, 61.8 is what I said. And then let me see, I think, if I'm thinking about this correctly, 1% off from that is about $600. And so I think by about 0.5% is maybe 0.05% is what I missed that by, because that came out to 61,838. You guys can calculate how much that only missed by $38. Not bad. We hit that price target today, struggling with the 50-period EMA and SMA. We couldn't get over it for support. Got rejected. We could be heading down towards this lower price target of 56.4 on Bitcoin if we keep on traveling south on that. The RSI is flirting around 50. If that drops strongly below 50, then we could start to see more downside pressure on Bitcoin. In the meantime, though, there's a ton of support down below. Like this area down here just has so much in it. That's why it's that big, chunky green rectangle that you see on here with two of the price targets being within it. There's just a ton of support in that area from about 55 to about a little over 56. And actually, it goes up to 57,000. So 55 to about 57,000. Just tons and tons of buying pressure that we find in there. So we'll see those two rejections that we have there. Also the EMAs, the 50 EMA and SMA that are there. If we start to lose the 5 and the 13 instead, and we start to head south, we lose this trend line that we're traveling on right now, then we could start to see more of that selling pressure come in. NVIDIA, check this out for NVIDIA. Came in here, we got price target 1 the day that I put this out. The next day, we hit price target 2. Awesome, awesome. I said we could float around in here while we look for the floor. It happened to be along this trend line, so couldn't break out of the ceiling, found the floor. Couldn't break the floor, found the ceiling, got stuck. So we kind of like chopped sideways a little bit. Today, we made another run at that ceiling, sold off, and then we broke through that floor. And coincidentally, and it's a technical analysis coincidence, if you will, that from trough up to peak, we are at the 23.6. So that's where we sold down to. That's exactly where that thing stopped. And if we do continue to bounce off of that, we have plenty of resistance up ahead. I think we're heading back down towards this critical support in the near term for NVIDIA that we start to see 119 to 120 start to come out at some point in time tomorrow. We'll look and see where that floor happens to come in. If that does hold as a floor, then it's a matter of breaking this top trend line and really fighting with resistance. Again, remember their earnings. There are only 4 trading days left up to their earnings. So we'll see if we get that run up. Remember, I said this in my video on the NVIDIA stock price prediction and the NVIDIA earnings projection. If you haven't watched it, I know it's a long watch, but there's tons of information that are in there. You absolutely should. I said for that one that we're going to be left in a really interesting place, and that if the market sells off, if those multiples compress, NVIDIA is part of the market. Its multiples are also going to compress, and so that's something to watch out for. It's hard to jump really high when the floor is just falling out from under your feet. And so NVIDIA is not an island. It's not going to be immune to the market movements that are out there. The markets draw down today. NVIDIA also has some of that drawdown also happening today, leading up to Jerome Powell's speech tomorrow around 10. Things are probably going to be pretty messy and pretty dicey up until that point in time. Another one that I'm excited about is Tesla. I put this out and I said where there was resistance to the upside, where there's support, when we had this green candle right here. So I had this out on YouTube. Before that, I had it over in the Discord. And I said, guys, if we break this resistance, we're heading up to 234. If we break this support, we're heading down to 212. Today, we hit that 212. As a matter of fact, we had a low price of 210.32. We closed at 210.66. So we hit that price target, absolutely nailed that price target. I thought that that was really cool. I thought that that was incredible. And the thing is that with the new form of technical analysis that I'm doing, it hasn't been a one-off. It just keeps on working. And now it's a matter of turning it into tradability. And I think that that is also going to be wild. It's going to be huge. It's going to be big. And if you guys want to see those trades, if you want to see those buys and sells, they are available at the Discord, available through the Patreon, link down in the description. And like I said, guys, if you want to learn about technical analysis and really bring power to your portfolio through technical analysis trading, there's also a link for a technical analysis trading course down in the description. Use that code word doctor when you sign up. It's going to save you a ton of cash when you do that. The bread recipe is in there, which is a trading strategy that is super straightforward, has very few indicators with it, and very clear descriptions on exactly how to set it up, how to use it. And then that can help you along with some of the other things I have to talk about about where you could possibly find your entries, where you could possibly find your exits, but never telling you what to buy or sell or when to buy or sell it. Just can't do that. You're not going to find that, but we can teach you about how to identify those places. Guys, thank you very much for watching. I really do appreciate it. Can't wait to come back with that next video. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.